What if I told you there is a pharmaceutical company that once relied on a single drug for nearly 60% of its entire revenue? We're talking about a drug that didn't just dominate the market, it defined it. It became the best-selling medicine in the history of the world. It was a cash printing machine unlike anything Wall Street had ever seen. But then the inevitable happened. The clock ran out, the patent expired. Now for 99% of companies, that is a death sentence. That is the moment panic sets in. That is when stock prices collapse, CEOs get fired, and the company fades into irrelevance. But this company, they didn't collapse. In fact, they planned for this specific moment for a decade. They went to war with the market expectations, and they won. Welcome back to Grow with Tony. I am Tony, and today we are diving incredibly deep into the story of AbbVie, ticker symbol ABBV. This is a dividend powerhouse, a big pharma giant, and a stock that investors both love for its massive cash flow and fear for its looming risks. Just a quick disclaimer before we start, I am not a financial advisor and this is not financial advice. I am just a guy analyzing businesses. Always do your own research before investing your hard-earned money. Now, to truly understand the magnitude of what AbbVie has achieved, we have to go back in time. We need to look at where this giant actually came from because it hasn't always stood alone. If you were investing back in the early 2000s, you wouldn't have found a stock ticker for AbbVie. Instead, you would have owned shares in Abbott Laboratories, a massive healthcare conglomerate that has been around for over a century. But in 2011, the leadership at Abbott noticed something interesting. They realized they had an identity crisis. They had two very different businesses living under one roof, fighting for resources. On one side, they had medical devices and nutrition, think baby formula, Similac, heart stents, and diagnostics machines. These are steady, boring, predictable businesses. They grow slowly, but they rarely crash. On the other side, they had proprietary pharmaceuticals. This is the high-risk, high-reward world of drug development. This is where you spend billions on a lab experiment that might fail, or it might become the next cure for cancer. The two business models just didn't mix. So in 2013, they decided to split. They spun off the pharmaceutical division into its own separate public company. That new company was named AbbVie. When this happened, the market was skeptical. Actually, skeptical is putting it lightly. Many analysts looked at AbbVie and thought, well, Abbott is keeping the safe assets and they are dumping the risky assets into AbbVie. Why did they think that? Because at the time of the split, AbbVie was overwhelmingly dependent on one product. It was a one-trick pony. And you cannot tell the story of this company without talking about that product. The elephant in the room, the drug called Humira. Humira stands for human monoclonal antibody in rheumatoid arthritis. But you don't need to remember the scientific name. All you need to know is what it did for the bottom line. Humira is a biologic drug. It's an injectable protein that targets a specific part of your immune system to lower inflammation. It became the gold standard for treating autoimmune diseases, rheumatoid arthritis, Crohn's disease, plaque psoriasis, and ulcerative colitis. It was essentially a Swiss Army knife for the immune system. For a long time, Humira wasn't just a product, it was the identity of the company. At its peak, this single drug generated $21.2 billion in revenue in 2022, the year immediately before U.S. biosimilar entry in January 2023. Let that sink in, over $21 billion. That is more revenue than many Fortune 500 companies generate in total. It allowed AbbVie to build a fortress of cash. But here is the problem with the pharmaceutical business. It is a ticking clock. When you invent a drug, you get a patent. This gives you a period of exclusivity where no one else can copy you. You can set the price and you own 100% of the market. But the moment that patent expires, the doors fly open. This is where things get technical but very important. Unlike simple chemical drugs like aspirin, which are easy to copy perfectly, we call those generics, Humira is a biologic. It is grown from living cells. You cannot copy it perfectly, you can only make something highly similar. These copies are called biosimilars. For years, Wall Street looked at AbbVie and asked one terrifying question. What happens when the Humira patent expires in the United States? This event was so significant it had its own name. They called it the patent cliff. The fear was that as soon as biosimilars like AbbVie or Cyltezo hit the market, revenue would vanish. While 40 to 50% list price discounts were initially expected, actual net pricing involves complex rebate structures with pharmacy benefit managers. Typical net discounts range 35 to 50% depending on payer contracts. Investors were terrified. They thought, okay, the music is going to stop, the cash is going to dry up, this stock is going to crash. So, how did AbbVie survive the cliff? How has the stock price recovered strongly post-patent cliff, trading within 7% of its October 2025 all-time high of $240.69? The answer lies in one of the most aggressive and well-executed strategic pivots in corporate history. Management under former CEO Richard Gonzalez, who led the company from spin-off until July 2024, and current CEO Robert A. Michael, who took over July 1, 2024, didn't just sit around waiting for the ship to sink. They went to war. Their strategy had three main pillars. Pillar number one was the massive acquisition of Allergan. In 2019, AbbVie dropped a bombshell. They announced they were buying Allergan for $63 billion. The market hated this news at first. The stock price dropped. People thought it was a desperate move to buy revenue to hide the Humira decline. They worried about the massive debt AbbVie had to take on to pay for it. But looking back, it was a stroke of genius. By buying Allergan, AbbVie acquired a product almost as famous as Humira, Botox. Now, when you hear Botox, you probably think of cosmetic surgery, smoothing out wrinkles, and Hollywood celebrities. And yes, that is a huge part of the business. We call that medical aesthetics. It is a cash-pay business that doesn't rely on insurance companies. But Botox is unique because it is also a therapeutic drug. It is used to treat chronic migraines, overactive bladder, and muscle spasms. Here is why Botox is a moat. Botox maintains a dominant market position through strong brand recognition and physician familiarity, though it faces competition from other branded neuromodulators like Dysport and Xeomin. However, these aren't true biosimilars yet, as key patents remain in force through 2025 to 2027. By acquiring Allergan, AbbVie instantly diversified its revenue. Suddenly, they weren't just the Humira company anymore. They became a dominant player in aesthetics and neuroscience. Then came pillar number two, the heirs to the throne. AbbVie's scientists knew Humira's time was limited, so they spent years developing the next generation of immunology drugs. They needed something better. They came up with two specific medicines, Skyrizi and Rinvoq. I want you to remember those names because they are the engine of AbbVie's future growth. Skyrizi is an injectable biologic that targets a different protein than Humira, offering cleaner skin for psoriasis patients with fewer injections. Rinvoq is a daily pill, not an injection, which is a huge convenience factor for arthritis patients. The company's management made a bold prediction. They told Wall Street, "We believe Skyrizi and Rinvoq together will eventually generate more revenue than Humira did at its peak." That was a shocking statement. Replacing a $20 billion drug seemed impossible. But if you look at the earnings reports over the last few quarters, they are on track to do exactly that. These two drugs are growing at an explosive rate, capturing market share and proving that AbbVie's research and development pipeline is world-class. They didn't just replace Humira, they upgraded it. And finally, pillar number three, financial discipline and the dividend. This is the part that really matters to you if you are a long-term investor. Why do people hold this stock for decades? Why is it a staple in pension funds? It comes down to reliability. AbbVie benefits from an inherited dividend king status. Abbott Laboratories increased dividends for over 50 consecutive years before the 2013 spinoff. As an independent company since 2013, AbbVie has continued this streak for 12 consecutive years of increases. Even during the patent cliff, even during the acquisition of Allergan, and even during global economic downturns, they kept raising that dividend. This tells us something about the company's culture. They prioritize returning cash to shareholders above almost everything else. They know their investors are there for the income. When you invest in AbbVie, you aren't looking for a stock that will double in price overnight like a tech startup. You are investing for total return. That means you get a steady share price appreciation combined with a juicy dividend yield, usually around 3 to 4% that you can reinvest. It is the classic snowball effect. You buy the stock, they pay you dividends, you buy more stock with that money, and over 10 or 20 years, that compounding creates massive wealth. However, I have to be real with you. I cannot paint a perfect picture without showing you the cracks in the canvas. No investment is risk-free, and AbbVie has some serious challenges you need to be aware of. Risk number 1 is the government and drug pricing. In the United States, there is immense political pressure to lower drug prices. The Inflation Reduction Act, or IRA, gave Medicare the power to negotiate prices on certain high-spend drugs. Since AbbVie sells some of the most expensive and widely used drugs in the world, they are constantly in the crosshairs. While the Inflation Reduction Act creates long-term pricing pressure, AbbVie's key growth drugs Skyrizi and Rinvoq may benefit from protections that could delay Medicare price negotiations until the late 2020s. Risk number 2 is debt. Remember that $63 billion acquisition of Allergan? They didn't pay for that with loose change. They took on a mountain of debt. While they have been paying it down aggressively in a high-interest rate environment, carrying a lot of debt is a burden. It restricts their ability to make other big moves. Risk number 3 is concentration risk still. Even though they diversified with Botox, AbbVie is still heavily reliant on its top 3 or 4 products. If a new study comes out tomorrow saying that Rinvoq causes a serious side effect, the stock would tumble. Unlike a company like Johnson & Johnson, which sells everything from baby powder to band-aids to high-tech surgery robots, AbbVie is still a pure-play biopharma company. If the science fails, the business fails. So bringing this all together, who is this stock actually for? If you are a day trader or if you are looking for the next AI or semiconductor rocket ship, AbbVie is going to feel very slow. It is not going to give you a 50% return in a month. It is not Nvidia. But if you are building a retirement portfolio, if you want a company that generates billions in free cash flow, pays you a growing income every single quarter, and has a management team that has proven they can survive a crisis, then AbbVie is a cornerstone stock. It is a sleep well at night investment. It's boring, but in the world of investing, boring is often beautiful. It's the tortoise that beats the hare. Now, before we wrap up this deep dive, let's distill everything we have discussed into the key lessons. Here is what you need to take away from this episode. Number 1, adaptability is the most important trait in business. AbbVie faced the expiration of the world's biggest drug and didn't die. They planned, they acquired, and they executed. Number 2, a strong pipeline is better than a single product. The transition from Humira to Skyrizi and Rinvoq proves that innovation is the only way to stay alive in pharma. Number 3, cash flow is king. The reason AbbVie can buy companies like Allergan and keep raising dividends is that their core business prints money. And finally, number 4, risks are always present. Whether it is patent cliffs, government regulation, or debt loads, you have to be comfortable with volatility if you want to own this sector. AbbVie has proven it has a relentless engine. It survived its biggest test. The question now is simply execution. Can they keep the growth going for another decade? I personally think they have a very strong hand to play, but I am just an observer. The real judge is the market. I would love to hear what you think. Do you own AbbVie? Are you worried about the debt from the Allergan purchase? Or do you think Skyrizi is going to be even bigger than they say? Let me know in the comments below. Also, tell me what company or topic you want me to cover next. Seriously, drop a comment and I will add it to the list for a future deep dive. If you found this breakdown valuable, please smash that like button, make sure you are subscribed, and hit the notification bell so you don't miss the next episode. Thank you for listening, stay safe, invest wisely, and I will see you next time.